right, guys, Sam with you here on a Monday. What are we? August 6th here, Monday. We're kind of late morning. And I'm trying to get an early start on the Bitcoin video today. So lots of developments since we last spoke here on Friday. And some good things to learn, some good lessons, and some interesting developments here as we reevaluate and look for signs of life for the bull case. Now, a couple of things to mention. First, I should tell you that I am nursing just a terrible cold. So I'm going to try and get through this without too much sniffling or sneezing, but I have been sick all weekend. So bear with me if I'm a little stuffy. Secondly, you know, as you guys know, my partner, Quan, and I, we try and offer you these two scenarios, right? So he's been offering you the bull case. I'm doing the bull case, or pardon me, he's been offering you the bear case. I'm giving you the bull case. So there's a lot of meat here to dig into, and I want to strongly encourage you to, if you haven't seen it already, to watch Quan's video. There's so much educational content in that video that I strongly want to encourage you to watch that and really take notes, understand it. If nothing else, get a feel for the caliber of the education that's available to you within the Trade Devils University. So one thing I will tell you is that we have now we have 3 grandmasters and 4 senseis. That you know we're in our organizing of the educational material, we're borrowing from the martial arts. So we're organizing things in our belt system. You can learn more about that over on our Twitter feed. So when I say a sensei or a grandmaster, what these are, they're trading coaches. But these are, you know, the interesting thing about this business that I've built here with Trade Devils is the caliber of people that I've been able to attract. So all of the senseis and grandmasters, these are all former clients. These are all former members that just took to the material with real gusto, mastered it, became Elliott Wave certified, and now they work on the team here with me. And it's been very rewarding for me to watch the business grow and see the kind of people that we've been able to attract. So all of that said, I just want to encourage you to watch that video, get a feel for the kind of education you can get from us. So, you know, certainly, many of you have watched a whole lot of videos from me. I think it's over 600 videos now that we've done here. But so I'm so glad that you're getting another voice and another perspective on how to approach the market. So keep that in mind, right? There's 7 of us. So you're just hearing from 2 of us currently. Hopefully, some of my other coaches and senseis will get more comfortable and be offering you some video as well. So you can perhaps look forward to that in the future. All right, so let's dig into Bitcoin. Actually, I guess my marketing department will yell at me if I don't mention this. Please give us a follow over on Twitter. We really make an effort to connect with you there. So if you're not a member, but you're just following along either on YouTube or over on maybe you're on YouTube, but not on Twitter yet. Please consider giving us a follow on Twitter. You'll learn more about the belt system. We really do make an effort to engage with the followers there. Many days we'll let our Twitter followers choose what asset is going to be analyzed. So we'd like to think there's real value in giving us a follow. So you can find us over on Twitter at Trade Devils. That's our handle there. All right, we do have this contest that we're running for free membership, so there's some good things to learn there. All right, let's dig into it. So this is the count we had, and currently the most recent trade that I have in Bitcoin. So let's get to it, right? So here was the big buy opportunity that I was shouting about on Friday. Now, okay, so the thing that I want you to understand here. And what I hope you take away from this, I would propose to you that kind of a technical confluence there, that setup, you have to take that. You have to take that 100 out of 100 times. You have to pull the trigger there. Now, understanding that it is not going to be a winner every time. Right? We know that, right? There is no trading methodology. There is no algorithm. There is no software. There is no trader. There is nothing anywhere on the planet that can be right. You show me something that's right 90% of the time. Very rarely are people right 50% of the time. But you can't back away from the opportunity that was there when you see that happening. You have to take that trade. Now, was there damage done here? Well, I took some losses here because I had started buying. I did a 35.65. I had started buying here, and if you go back, what is it, 6-7 days ago, when we were first hitting the 38 here and running into this shelf of support, I started buying at the 38 on the first time we tapped the median line. So I did 35% of the position here, the other 65 here. Now, we did get far enough away, and I think we were far enough away, as I recall, on Friday to where my strong recommendation was to bump the stop up to just below the 50, because there's no reason to hold risk. If we had moved about $250 from the stop, or pardon me, from the entry, I think I was long around 13. So yeah, I didn't buy it at the 50. I think my fill was 13. Stop was just under the 50. So a very small loss here. But remember, I had taken 35% of my position at the 38. So averaging down the two. So I did take a small loser there, right? Net loser. But that doesn't, losses are part of trading. This is a probability event. When you see that probability event, you evaluate, calculate the risk, the potential reward. We looked at it, was very juicy potential reward. So a very practical business decision to enter the market long there. And you had the opportunity to tighten the stop up to just under the pivot. What we're looking for is precision. So there was no reason, if that was going to pivot there at the 50, which after hitting it to the tick, no reason to hold a stop below that. If it was going to pivot there, that was the pivot. So that you had the opportunity to tighten up the stop, essentially sit in a free trade, and you hope it goes. It rolls over, the stop does its job. You should be out of that trade. Now, a small loser for me, right? It's just reality, right? I've been doing this long enough that it doesn't. Am I disappointed? Sure, I'm disappointed, right? Nobody wants to get stopped out, but I'm practical. I know that taking that trade, I would have loved to have seen that gone. And sure, it's disappointing when it doesn't, but not because I'm crushed about the loss, right? Losses are part of trading. That's just cost of doing business. You enter the market, you subject yourself to that risk, you try and manage the risk the best that you can. You look for opportunities to reduce the risk, thus tightening the stop. But it's the bigger impact is that it's altering the potential roadmap here. So we have to accommodate now, based on probabilities, where we are most likely, and for bulls to hang on to any kind of account here that's practical and that could be realized, we've got to reevaluate here, because if this was going to hold as a 3, 4, 5, that's the hold. That should have held there. Now, if you look at this, so this is typical of Bitcoin. So technically, this count is still, from an L8 wave perspective, is still valid. We have not taken out, as I'm labeling it here, the wave 1 high, right? So I have this marked with this yellow line. So as the market came down here and we paused at the 618, I did another 35% here of what I would allocate to a trade like this. So I took 35% on a front run on the 618. For the possibility that the 618 could hold. Now, my stop is sitting just below the wave 1 high, but I have adjusted that just slightly, and I'm going to show you why. So, reevaluating here, could this be our low here? Well, it absolutely could be. What's the impact, though, to this count here? For the depth of this 4 to ultimately realize a new high and get to this 5. Well, here's where you got to really just be analytical about it and just evaluate the probability. So again, we can look at this and say that there still is a possibility and a probability that this is realized, that this does become the wave 4. We know wave 4s can go that deep. As long as it doesn't overlap the wave 1 high, we still have the potential for this impulsive structure to be realized, although the probabilities are reduced greatly. And even if we do get an impulse or a diagonal coming out of this to give us a 5, the probability of it getting to a new high here are reduced. Much more probable that we either run into a truncated 5th or a double top. But, right, stranger things have happened, and we've seen something go to the break. Again, we've broken the 65, so about a 70% retracement to get to that target. Well, it's happened. Right, but what are the probabilities? Well, let's look at it. Now, this is a study that I've shown before that eSignal put out not too long ago. You'll find it's very consistent with any of the material that you'd find on Elliott Wave International, any of the resources for Elliott Wave statistical analysis here. We're looking at wave 4 ratios. Well, we know that the majority of wave 4 ratios, excuse me, the highest percentage are between 30 and 50% here. Right? So once we go below the 62, right, or in our case, we've broken the 65 and we're pushing the 70. But we'll just round it to the 62. For a wave 4 to go more than 62%, that happens only 10% of the time. So if we go back here and look at this, we can say, well, yeah, it's possible. But do you want to be trading with 10% probability? Well, probably not. Now that doesn't mean so you say, well, why take the entry here? Well, you know, I have a small enough position there to where I'm not uncomfortable with that risk. So what do we got here? So we've got an 8.6 to 1. The entry here was at, I think it was at 13 or 15. I have to go back and check on Bitstamp. So my stop is now sitting at 67.81. You know, that's not a big position here. So that's a trade I'm comfortable with. Not necessarily something that I would advise anyone else taking. I have a few members that are in that with me here, and we're going to adjust the stop. But I'll show you why that still may be something to consider. But it's not off of this count because we're now in the 10% probability that this is going to be our wave 4. Well, what is more likely? Well, let's go look at it. So if we go back here and then we say, well, if we've gone over 62%, what is that more likely? Well, if we go to a wave 2 here and we look at our wave 2 relationships, well, we can see 73% of wave 2s are between 50 and 618. That's why I always tell you that's where we're looking for a wave 2, right? It's not me just saying that's where I'd like to see it. That's statistically where we're expecting it. And that's all we're trying to do is play the odds here. So if we include wave 2s that go beyond the 62, that's another 15% of the time. So we have an 88% probability that a wave 2 is going to happen at that depth. Well, let's go back here and rethink this. So a couple of things here just before we move over to the modified count here. We had talked about the shelf and a couple of shelves here. So we had this one here at the 38, which is why I started buying there. We had this little shelf of support. The idea was we had tapped the median line. We're at the 38. If that was going to hold, that was not an unreasonable place to take a calculated risk for the 4 to go in, the 5 to be realized. Right here was the second place to add, as we were still within that. We're still really within this zone of congestion, you might even think of it, right? So all of this essentially congestion here. So coming down to the lower edge of this at the 50, where we are still in a statistically significant probability range here to be a buyer at the 50 for that outcome. That's all. That's not unreasonable to be looking there. So the play, hopefully, you know, people let the stops do their jobs and you're not underwater having ridden that down. I'd like to think that anyone who was in that trade has got a stop on it. Right, so we have these little shelves, right, that we had been talking about here, and then the other one was down here where it's very obvious here. So if we take this, I'm looking all the way over to what I'm proposing. It was the wave 4 over here, and we just kind of draw all of this up here. I want to get that wave 4 high. I want to get the wave 1 high. I want to get that B high. So if I just grab that and drag it all over here, you can see, well, we've come right to the tick here. So it's this wave 4 pivot right here has so far, right? We do not know that that's the low, just as we did not know that was a pivot that was going to hold. This may hold. We have some things to look at here, which I'm going to show you as to create a scenario here that gives us a new probability event to be able to trade from. So we've come down to this, and we talked about one of the things that I talked about was that underneath the 50, we had this big hole over here where we just had no volume. So if the 50 was going to break, and this is reinforcing what I had mentioned earlier, was that if this held, the probability was that it was going to be a quick drop because there was no support here. You could just look at the volume profile, and we had this big hole over here that was generated because of this move that we had over here. Right, so where we had, well, let's see, trying to line them up there. So from the 50, where we had that just where the market just skyrocketed right through, it just blew right through, and it got to this next level of congestion here. So we had this big hole, just low volume here, where there had been no market acceptance. So if the 50 was going to break, it was going to be a quick move down to the golden zone, and that's exactly what we saw. In fact, as we started to poke through it, that's when you have to reconsider. As it first broke, for a moment it looked like the 65 was going to hold, and it's interesting. You can see how this came down here, and likely algorithms are kicking in here. So the first reaction at the 50, then we came down here, got a small reaction at the 65. Bear's too strong. They start breaking it. The more times they test it, now it fully breaks, and we get this pretty good push down here, and we've run into this prior resistance, potentially now, it's still just potential, offering that support. Well, you got to reevaluate and say, well, if I'm at a 10% probability event down here, then first thought is, well, my count's wrong, right? So this is with the depth of retracement, that's much more likely, right? If we're going to keep our bullish hats on, that's much more likely to be a wave two. So have I got the count wrong over here? And so that's what I would propose to you now, is that we've got to reevaluate the count and reconsider it, recount it. So here's what I come up with now. So, you know, the thing about this was this was the count prior to this last push up. Right, so if we look here as to where that's coming from, if we just go back to the tools that we can use to help us with our probability analysis. So taking our wave one, projecting from our wave two, well, we know that wave threes, the highest probability for them is between the 1618 and the 175, and we had come just shy of that 1618. So I'm proposing this now, this now is our wave three. Right, and that the move to push this wave three up here was incorrect. That's not what the market gave us. So can we recount it and still maintain the integrity of the Elliott count without forcing it? Do I just have this wrong? Well, let's evaluate here. So if this is 1, 2, I can certainly get 5 waves out of this into my 3. What I don't love about this count, and part of the reason that I had made the switch, was this. So if you look at the wave 2 here, right here from in this wave 2, relative to what is now potentially the wave 4, I'm a little uneasy with that. That symmetry is off. Now, you could, I suppose, argue that all of this is wave 4-ish like behavior, and it's not until we break out of that. You know, you got to get a count on it somewhere. So technically, here's the wave 4, right? So this lack of symmetry, I don't love, but until we break this wave 1 high and we break this level, this shelf, as I'm just describing it, of support, you know, I'll allow for this because the rest of the count plays pretty well. So let's with that acknowledge that makes, you know, it's not ideal that we'd have that. The time and the depth of this 2 relative to this 4 makes me slightly uneasy with this count, but I'm going to lean into it until it's proven, until it's invalidated. Well, let's consider here. So 1, 2, this becomes the 3. We get a skinny 4. We've got a clear 1, 2 here into a 3, 4. And I tell you what, I think we've got a truncated 5th up here. It's the only way I can get this count to play. So if I open this up right here just to get into the nitty-gritty of it here, I can get a clear 5 into my 1 here. Here's my 2. I can get 5 into this 3, A, B, C into my 4. It looks like I get 1, 2, 3, 4. This is technical. So from my I can get it on here, from my 2 to my 4 goes right to the golden zone. So there's an example, right? If we think about the larger degree, well, there's an example here. So a wave 4, it's overlapping the wave 1 just barely, going into the golden zone, but look what happens here. It can't get to a new high. So we get potentially now, as I have it labeled, could be proven incorrect, but as I have that now, what we have is a truncated 5th. Truncated 5th to give us a potential 1 wave here to be the top of this. So 3, 4, 5, we don't get the new high, but since we know an algo won't care about that, it's just going to use the highest pivot. That's what I continue to use in terms of any retracement moving down. So I have this as 3, 4, pivot is in, so now we're going back down. So let's go back to that 30-minute and see if we can make sense of where we are going down. So I can get a count that works here into this as a 1. Well, if that's a 1 here, and you can see I've noted this because we've changed the stop. We moved it down by $87. And I'll show you why we did that. Well, let's go back to review. If this is a completed 1 wave, well, of course, just like any 5-wave sequence, we're looking for the 2 between the 50 and the 786. So let's draw it up, see what it looks like. Well, if we were wrong, if I was wrong, let me be very specific. If I'm wrong about this being this 1, 2, 3, 4, and in fact it's a completed 1, well, we're going to draw from the low to the high. All right, I'm going to use the absolute high. So what have we done now? Okay, so this is why I've moved that stop to just under the 65. So previously, as I had it, it was here. Right, so you can see we had it previously just under the wave 1 high. I've moved it to just under the point of control on the assumption that if I'm going to come down here for this, and this is going to be a wave 2, that I want to be just under that point of control. So now I've got to stop at 66.94, roughly, depending on your exchange. But you could draw it up from the pivot low here, from this double bottom to just under the 65. Happens to be just below the point of control. Now, one possibility here is that we've come down here, we've tapped the median line or missed it by a couple of ticks. It looks like we missed it by a few ticks. With a little visit to the median line, and a front run on the 618, we may have a 2 low here, right? All of the ingredients are there. It's possible we've got a 2 that's in there. And then now this changes the count pretty dramatically, right? So now we're looking for, off of this low, big if it's going to hold, we're looking for substantially higher prices, right? So this would be the algo target. That's first target. But if it's a true wave 3, if we're going to go wave 3, well, we've got much higher prices to go. So if we back this out, let's go, we can go to a 4-hour and think about that. All right, so wave 3 potential targets all going higher, right? So wave 3 target would be here at the negative 100, which would be very close to the 1618. We call that, let's call it 11,200. So there's your new, if this is going to hold, emphasis if this is going to hold here. For bulls, that's a potential wave 2 going to 3, 4, and 5. Right? So that's still alive. Right? It's still a possible outcome here. So let's go back to our 30 and think about what has to happen here. All right, so back to this count here. So, you know, it's kind of interesting here. So you look here. So from this, so we've had about what was that low here? July 13th here, and now we put in this low here at August 12th. I'm sorry, excuse me. So from that move here, we've given back, you know, a pretty good chunk of it. And more interestingly, we've had bullish news, right? So the market did not respond to the bullish news. Here's what happened when we got the bullish news. Market went straight down. Asia didn't like it, right? So for whatever reason, now you can say, man, it's market manipulation. You know, they want it down so they can buy it lower before it goes up. All sorts of ways you can rationalize it. The chart price is truth. You can rationalize all day long. You can come up with a reason why it went up, why it went down. There's always some way to rationalize it. Price is the absolute truth, right? Price goes down. Fewer buyers than sellers. Market doesn't like it. Down we go, right? Takes out the stops, right? As we were looking at the 50, we get stopped out. And we reevaluate. Is there a business decision to be made down here that would support taking a calculated risk for higher prices, recognizing that we very well could be stopped out? All of this could be invalidated. If this is going to keep going down, then the bull count is wrong, bear count is right. Bears will win it, and this is going to break down and go much lower. And potentially, this is an A, B, C, and we're just getting started into 1, 2, 3. Now, how are we going to know? Well, you're not going to know until we see what happens here on the first significant retracement. Do we come into a 4 and go down for a 5, thus invalidating this count because we'd have, in this case here, we'd have an impulsive wave moving us down. So potentially this would be ABC, and now we're starting a one wave going down, which would lead to substantially lower prices. I still do not think that's what's going to happen, but that's my opinion, right? Take it for what it's worth. Ultimately, the chart and our methodology will dictate, because regardless of what you think, right, if you're going to maintain the discipline of this methodology, the count will determine where the next opportunity is. So I propose to you that there is still a bullish opportunity to be a buyer here. Here's where this count gets, in my mind, this trade gets invalidated, because technically, if we're trading this as a 1, the 2 wave could go as deep as the 786. We could go deeper. As long as we stay internal to this pivot, this could still be a 2, but the probabilities diminish dramatically the deeper we go, right, as to what it is. So this is still a very common retracement point for a wave 2 to go to 786. So it wouldn't kill the bullish view. It's just going to reduce the enthusiasm. It's going to reduce the probabilities. But we could still come out of this with this. We could still come out of this with a motive wave, with an impulse, and still be on our way as a 1-2. Right? There's again, you trade a count. Excuse me. You trade it until it's invalidated. Well, we haven't even broken the wave 1 high yet. So this count is not yet, well, we got pretty close, right? Looking at that, we got pretty close, but close done. What kind of value to put in close? It either violates it or it doesn't, right? And so far it has not. So this, for all we know, that could be the pivot right there, and off we go, right? And this whole thing moves, and we end up with this. So let's consider the possibility that that's what we're looking at, right? Then that would be 1-2. Then we'd be just off into the 1 wave of the 3rd wave of the larger degree. Right? We aren't going to know until we see how this resolves. Do we, again, as I said, do we go 3? Do we get a 4-5? Just like before. It's just when we consider the alternate count, the prior count, right, as I showed you on Friday. So we weren't going to know until we saw if we went up out of this in 5. Did we come out of this in 5 to give us that count? How would we know? We wouldn't know until we see what's the reaction here for the potential 4. Do we get the 4 leading into the 5? We don't get it. And as I said on Friday, it was very reasonable that this could come down to this level. But in going that deep, now we're altering the probabilities, right? Do you see that? That's my point here. We're altering the probabilities of that happening, of that being realized. Even just if you take that, right, and we think about what I showed you here as an alternate, probability now of new highs greatly reduced for this to be realized as a 3-4-5, maybe a double top. Maybe we get algo target, right? Maybe. Right? So now it's just a bit of a hurry up and wait. So what do you do if you're trading it? Well, let's go back to this count. Well, if you're long here, or long, let's see, there's 2 ways you could be long. You followed me from I think it was Saturday where we went into this. You're still long. You've got to stop. Well, as I showed you, we moved it down just very slightly to accommodate the alternate count. Right? So you could be long here with a stop under the wave 1 high. You could be long here, right, as I am now, with a stop under this 65. So we could call it 67, you call it 6,700 just to round it. It's going to vary from exchange to exchange. Draw this up, stop under the 65 to allow for this to come down as a wave 2 and still be a 2. Right? We know now lower probability that it's a 4, but still high probability. We're right in the sweet spot. This is the sweet spot for a wave 2. Between the 50 and the 618, 73% of wave 2s happen in that zone. Look where we are. So that's certainly a viable alternate count, right? Despite the fact that we've taken some losses along the way here. Welcome to trading, right? That's just part of it. It's controlling the damage from getting stopped out. That's the key skill here. Right? You got to be quick to move those stops. If you can reduce risk, you want to do it as soon as you can. So here we don't have enough distance yet. So unlike Friday where we did have that distance, it's too soon to move the stop here. Too soon. Now, if we get further, if we were to get up above, so we get on the other side of this lower parallel here to the median line, if we were to get on the other side of that and do something like this, we come out of here, we break it here, then the stop goes up to entry. We tighten it up. No reason to sustain the risk because now the assumption is that the pivot low is in. So it should not go back down and test. If it does, we don't like that. And I'd rather be out. And because what's next, it could be going to the 786. I don't want to ride that down on hope. I want to be out. I'll reevaluate here and see what this looks like. What does the wave count look like going down? Now, I can get a decent 5 coming down. I can get 5 in my 5th. You know, this 5's a little skinny here, but I do get a new low. I am just in front of the 618, and I am tapping the median line. So I stay with that bullish bias until proven otherwise. All right, that's me. Right? I'm not saying you have to do that. That's what I'm doing. Now, what the point of these videos is to offer some educational value. So I don't want my trade to be influencing your decision. What does the count show you? What does the data show us? What does the geometry show us? Right? Then you make a decision for yourself as to whether or not you're comfortable with that risk reward. I'm comfortable with it. I'm still long. And I'm looking for opportunities to get validation of that long, which I don't have yet, and looking for opportunities to add. All right, so let's go back here to this count as it sits right now. So the only other thing that we can do here, if you're not in the market here, which is not an unreasonable place to be, is at some degree here, I'm down on a 30 minutes, so this would not be an unreasonable level to be looking for this, right? Let's get 5. If we can we didn't really get it here. Right? So when we were looking to be buyers at the 50, we didn't get a good clean motive wave. We got kind of a sideways wash. Here, if I go back here. So this is what we were looking for. This area here, we didn't really get a good 5, which was a bit of a tell in that it looked like we might be getting some of it. Right? So we did look into that. So here was the buy. This, at best, we got, maybe there was a diagonal going in. It never really took shape, and the failure to get a push here. So you see what happened here? So it looked like you could have made a case that maybe there was a 4 here going in, but we never got that additional leg to give us the 5 to confirm that we had a motive wave. We didn't get it. So we end up with an ABC, and then we roll down. And as I had suggested, if this pivot was going to break, there was a huge vacuum over here. Well, now we see volume over here because, of course, we've done this now, right? So we've had all this congestion here, so that you can see the volume profile growing there as we buyer sellers. We have market acceptance here, so you see what's happening to the volume profile. Prior to that, here, no market acceptance. So there was a real opportunity, or real potential, I should say, if that low was going to break, that we were going to free fall down to the golden zone, where there might be some technical support from an algorithm kicking in to defend once this breaks. Now, keep that in mind, right? So we got to recognize this, that with that break, with this break, now there's going to be algorithms that are going to be sellers on the way back up. So we've got to recognize that. So this will be the first one. If that's going to be our low, we're going to have to get through the 50 here. We've got to get through that as well. And then there will be the all the way back. We talked about this on Friday. Those will be there to fight through because they will have targets that are lower than ours, right? Or they'll have, I should say it this way. If they'll have this target down here, right? So just like the algorithm that is sitting here now has targets up above. All right, so if this is an algo buy here, which likely it is, right? This is a front run. This is a front run on the 618 and a tap of the median line, just like we had it up here. If this is going to hold, that's likely algorithmically driven on a front run of the 618, tap of the median line. They've got targets up here, right? And they will defend that until it's realized, or they'll take the stop, just like all of us should. Right, so that's their target. So we have multiple targets. So it's always a fib fight, right? These guys have a target here. These guys have a target up here. Who's going to win? We won't know until we're going to get some tells, but we won't know until we see which one gets realized. But there will be tells, right? And that first tell that I proposed to you will be what happens on the first retrace. If we get a motive here, if we get a 5 wave coming off of this low, what happens on the first retracement? Is that a 1-2, or is that just the beginning of a 4 and a 5 taking us down here? All right, that's about as much as I can offer right now. At least I got through that without having to blow my nose too many times. Hopefully, I can get some sort of meds from my doctor. That's where I'm heading next. So with that, I will call it a wrap. Give us a visit on Twitter. You can find more information about our university and the training that we offer over on our website. That's tradedevils.com. And I'll be back to you guys tomorrow, hopefully feeling a little bit better. All right, guys, have a good one.